Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell, and we're continuing our discussions on uranium. Today we're doing a bit of a forum, and we have Govind Friedland, the executive chairman of GoviEx, with us on the line, as well as CEO Daniel Major. Govind, Daniel, welcome on the program.
Thank you, Colin. Thanks for having us on.
Yeah, it's a pleasure to be here.
Yeah, I want to start with discussing just the outlook for uranium. There's a sense that something has turned here. You guys announced a financing just a couple weeks back, and in no way have you been quiet over the last year, but kind of right before the turn happened, Sprott came in and led a financing in GoviEx, which ended up getting wildly oversubscribed. Daniel, can we start with your side? Just what are you seeing in the uranium market? Do you think that a bottom is potentially behind us?
Thanks, Colin. I think 2 points I need to make here. Firstly, certainly in GoviEx's case, we are more focused on the long term. The spot price as it is today doesn't really affect us other from a sentiment point of view. We're looking to be a builder in this market. So for us, the long term is very much the play, and that's what we're keen on the term price. But I put a blog out a few weeks ago where I kind of commented on this, and our view is that yes, we've had a weakness in the price. It's been due to excess inventory at the moment, the fact that most of the contracts were already covered, and that you had the enrichers producing excessive amounts of enriched product that were being sold into spot and deferring spot uranium sales. But the point we're making is, one, the high inventory levels were not actually relatively that high. They were half the level they were in 1991. You've had two peaks since then. They are not excessively high. If you look at them in the number of years, they were averaging between 2 and 3 years of total inventory with the utilities, which is what they normally hold. So yes, it looks like a big number, but it's not off the scale. The fact that long-term U308 contracts are starting to come to the end meant that current producers were going to have those reloaded, and they will need a higher price in order to be able to continue to capitalize their projects to add production back in. Similarly, with the enrichers, the same problem there, that over the next 3 to 4 years, enrichment prices had got to go up. They're down about a third of where they were contracted. So again, we were expecting to see rationalization in that market. And over the next 10 years, we're looking like something about 23 to 25% of global production coming off stream as old mines close. And at the same time, we're looking at 3% per annum production demand growth on the energy side. So I think all of this was saying there was a justification for the weakness in the price now, but there was a lot of issues there that were going to unravel fairly quickly and result in a very strong pricing going forward. And GoviEx's positioning has always been about getting the mines that we've got permitted ready to be able to fill that gap in the market. We are one of the companies with permitted mines. There's very few around. And certainly our Matajuela project, we're looking to get it in production around 2020, where we see the gap in supply and demand really opening up and the pricing becoming a lot stronger.
Daniel, continuing my line of questioning with you, GoviEx is by no means an institutional stock in that it's not the size of Cameco or Denison or Paladin, but it has huge backing in the Friedland family, Govind being the executive chairman. You've got Denison, of course, having merged its African assets in, and therefore the Lundins involved. Have you guys seen a resurgence of interest into GoviEx by, call it institutions or big groups approaching you the last couple weeks?
We have. I mean, the company was originally developed as well with institutional money. So Govind did a fantastic job when he started the company, bringing institutional money in. And a lot of those institutions are still with us to this day. As you pointed out, we also brought the strategics in. So Govind's family, more recently, the Lundin family through Denison. We have Cameco, obviously, in there. And the other one you didn't mention was Toshiba, who, of course, own Westinghouse, which makes them the largest nuclear provider in the industry. So we have, more recently, as you pointed out, Sprott coming on, supporting the placement. So we are starting to see a lot more enthusiasm. we are seeing a lot more interest, and I think the fact that our recent placement was all filled up and extended twice within 10 days is really showing the benefit that we've had from really marketing this company in the last 6 months. Historically, we'd really focused on just getting the job done technically, and it's only really in the last 6 months we've started to get our name out there, and I think that's shown the bones. We've shown why we're where we are and where we're best positioned for this cycle going forward.
Govind, I had the opportunity to spend some time with yourself and Robert in September in Italy, and you told me the story of founding GoviEx. It's unfair to ask you to condense what was a 20 or 30-minute story into a couple of minutes, but maybe if you can pick on some of the points of why you decided to start GoviEx, where the opportunity was, and how it all came together, that would be a very interesting one to tell.
Yeah, thank you. Thank you for the question. Well, mineral exploration is not unlike Easter egg hunting. If you have older brother and sisters, you never want to go, if you want to have success in finding Easter eggs, you have to go where they haven't been. So in the uranium world, it's the same thing. And there's very few countries that produce uranium. It's sort of 4 or 5 main countries. And so you're really limited to Canada, which has its issues. It's very high grade, but let's say a long permitting process. You have Australia, which has a very difficult permitting process as well, with local indigenous issues often slowing things down. You have Kazakhstan, and you have to deal with the power play there with Russian influence. It's very difficult to work. And after that, you really go to Africa. And when we looked at Africa, we saw very little foreign investment in Niger outside of Areva, that of course has been producing there for nearly 50 years and successfully exporting uranium through 7 or 8 changes of governments. And so when we looked at Niger, we saw this as a very attractive place, because not only is much of the infrastructure already there in terms of power and water and road and workforce, and there's a very competent modern mining code, which we're a member to. So when we looked at the big picture, we thought Niger is a very attractive place. And what I've been telling our shareholders and the market in general is that it's very attractive from a permit risk perspective. We looked at a project that the Chinese had, and from the time when the Chinese purchased their project to the time they got their mining permit was less than 6 months. And I joked about it. I said, that's in the Guinness Book of World Records, 6-month uranium mining permit application processing. And that's exactly what happened to us. We've spent 6 or 7 years exploring and engineering, and by the time we've really drilled, I guess we started drilling in 2008 when Cameco made their investment. And today we've drilled almost 700,000 meters, so say 70 kilometers of drilling. And we've delineated one of the largest and highest grade undeveloped uranium projects in Africa. And from the time that we submitted the permit application, the mining permit application, to the time it was awarded, was also about 6 months. And so it's, I'm very happy to say that and that also includes the environmental permit. Just getting the mining permit's only one side of the equation. You can't mine unless you have an environmental and social impact assessment that's approved by the government. So within the last year or so, we've now obtained all of the permits in order to build the mine, subject to project finance, which is another thing that the company's been focused on really for about the last year.
Well, that is a incredibly Friedland-esque or Lundin-style story of going towards other corners of the earth where people haven't explored to find the mega deposits that are left, and it certainly seems as if you guys have hit on one of those. Moving forward, now that the market is starting to pick up, or at least to the point where you guys were able to oversubscribe this placement, What is the $5 million to be used for? And Daniel, if you'd like to address this question.
Yeah, certainly. Govind really touched on it there at the beginning. We've always said that we have two areas, really. One, we have a project profile of developed projects. So we've got Madajuela already permitted and ready to go into production. Behind that is Zambia, already permitted, and we'll be working on that. And then we have behind that Mali. But our focus on Madajuela has been four-pronged. One, and we've already announced it, is the work that we're doing with the export credit agencies to start to put together the debt financing of the project. And that's quite well advanced, and we're working through the due diligence with a number of those already. And they will gradually work through onto the equity side, because some of those ECAs that we're working with will be Chinese ECAs for an offtake point of view, Indian ECAs as well. So we're working on a double prong there. We're working on the offtake side as well. But from a pure investor catalyst obvious point of view, more recently we released our Radon X results for a radon survey in Niger, which highlighted that there was a very strong anomaly right next to our open pit target. That is going to be a real target for us to go out and drill. The benefit of adding additional resource, and we're not adding resource just because we want bigger pounds, but if we can add additional resource to that, it will defer the underground mine. We're looking to expand that open pit resource to at least 10 years. That will add about $100 million to our net present value of that project. If we can just add 3 years of open pit mining, it brings in lower cost operation, and it markedly improves the economics of the project to allow us to get the project away at a much lower uranium price than many would consider it to be possible to do. We're continuing to work on technology optimization for the project as well. We have always said that there are things in that project that we can make better, and we will continue to work on those. So Madajuela is going to be about advancing that project, but more importantly, advancing it in a more optimized way.
Daniel, what price of uranium would make you as CEO comfortable with moving this story into production?
Yeah, I mean, we've gone and done the economics on this one, and certainly if we can add a couple of years of open pit, which we're very confident we can because of what we're seeing on the ground, then floor price contracts at $50 would certainly get my board very interested. Obviously, stronger than that would be better. But certainly we're sort of a good double figures, sort of heading up towards the 20% if we can get that. So yeah, that really is our target, and we certainly think the problem in the industry, back to the market stuff, is that there's going to be this very long timeline to get new projects into play, but the gap is going to open up, and that price is going to become quite strong. So we're relatively confident that those kind of prices we can get, and certainly if we can put them in a structured way with floor contracts, we'll be very happy.
Govind, you sent me quite an amusing email yesterday with a picture of 4 or 5 fish and the statement that utilities turn on a dime like a school of fish. What is your sense, and reaching into the network of people around you, of what we can see for uranium in the next year or two? Is it too early to tell, or do you have a strong feeling that the tides have turned?
Oh, this is a very good question. The utilities often play a bit of a cat and mouse game with the producers, which we've been seeing for the last couple of years. There's been very little volumes, both on spot and term, and we try to surround ourselves with much wiser, experienced people in the industry, such as Dave Cates, who sits on our board, and we get information from our sources in industry, and what I'm hearing and what they've been telling me for a long time is that we won't see a major price move until the utilities come back in a major way. And there's just been very little utility buying all year. What does appear to be happening in this current rally, we've seen that must have been a 10 or 20% rally in the last 2 or 3 days. And what appears to be driving this particular rally is that now the utilities have come back, and they don't come back just like one or two. From what I'm hearing, they come back all at once, and that's the school of fish analogy. They're all swimming to the left, and as soon as they want to come back and start negotiating, it's like they all hold hands and jump in at the same time. So, I don't know how long this will continue, if there will be a sustained gradual increase throughout 2017. We hope that's the case. It may be that there's a price movement, let's say, a year or two before we see that supply gap, that supply and demand gap opening up towards the end of this decade. So, we're already into 2017, and so it would make sense. We could understand why that would happen if we do see continued price movement throughout next year, and that's exactly where we want to be. We want to be close to being able to bring these projects into production once we get export credit agency support and the commercial banks, and we have further offtake signed with the consumers, and then we're ready to go. So just to answer your question about the use of proceeds, it's this financing allows us to continue the work that we're doing on the project finance, which is this four-pronged approach, as well as on the ground. We can look to optimize the Matahuela project by finding more pounds at the open pit, deferring the underground, which has a very strong impact on the project economics, and it's also much lower risk. It's like sandbox mining with the yellow trucks. So we're quite excited about the future, and we look forward to starting the new year, and hopefully we will have closed this current round of finance.
Like I had mentioned, the names associated to GoviEx are spectacular, and as any experienced speculator in the business knows, management and those associated to a company are key. We just had David Cates on the program, and that interview will have aired before this one, and he mentioned the fact that Denison's focus now is on Canada, and so they've taken their African assets and put it into GoviEx, which they're very excited about. Just thought it was a better fit to have a management team focused on those African assets. Daniel, do you mind touching on Denison's role, their ownership, and their role in the putting the assets into GoviEx, which happened just a few months back?
Certainly. That was one of probably the simplest transaction I've ever had to do, because it fitted both parties perfectly. When Govind and I approached Denison, we sat down and explained why we thought the deal made sense, and we were like preaching to the choir. They saw it as a very logical fit with us. They saw themselves very much wanting to focus on the Canadian assets, that having African assets was taking up management time from them, and they felt that they had to have a strategic option. They were very comfortable with us and appreciated that we were actually very comfortable working in Africa, and with our projects in Africa, we have a lot of experience in this part of the world. And they certainly felt it better to put it in a project company with such developed assets. And I think that's one of the keys of what we present to investors, that this is not exploration play in Africa. These are advanced projects. There's over $200 million being physically spent on the assets themselves, excluding the acquisition costs. All of the projects have gone through some form of pre-feasibility study, either internally or externally announced. So there's a lot of technical work being done here. And I think that was what was key to both parties coming together. We were at a very similar stage. All three projects have got a lot of exploration upside. We have what we have because at each of the projects, the drills were turned off to save funds, but they're still enormous projects in their own right. And our relationship with Denison has been excellent. While they focus on their projects in Canada, they're also always available when we want to talk to them about technical issues or the approach. And David makes a very strong proponent on our board. He's always got a very positive view and a forthright view of where he thinks we should be fitting together. And I think it's been an exceptionally good result. I mean, they came in as a 25% shareholder, and I long hope they're going to stay with us. And certainly that is the guidance that David gives us. They see us as a long-term play because they wanted to leverage up not only their own assets, but they liked Matajuela as well.
Govind, I'll finish the interview with you. You've been absolutely integral in building this company, and I think the name GoviEx may have something to do with you. Having seen many mega-sized mining opportunities over the past 30 and 40 years, what would you relate to potential investors as to just why this opportunity is so fantastic at this point in time?
Well, I think it's cheap. I need to start with. If you just look at the scale of what it is we have, we are, let's say, within the top 3 or top 4 of globally listed uranium companies after Cameco and Paladin. We're now just over 200 million pounds of combined resource, about 100 million in measured and indicated, with 2 fully permitted mining projects. That's very few companies out there. This current round of finance is at 10 cents a share, which is very cheap if you consider that we've already we've invested more than 200 million into the projects. And not too long ago, I can remember raising money as a private company at $1, $2, $3 a share. So this is a time when investors can buy in, at or near the bottom, where we're essentially a penny stock. When before, we were $300-400 million value, and I think all we need in order to get back to that point is the price move, and so we don't know how long that will take. But when you look at just at the laws of supply and demand, I think everyone would agree that sometimes toward the end of this decade, we're looking to see a pretty big move. So I think this is a very attractive time to make an investment. And it's best to have a highly levered exposure to uranium. You want to invest in the companies that are able to bring projects into production during a bull market. And that's the company's goal. That's our ambition. We've got an experienced board of people that have discovered and built mines in Africa and around the world. And that will remain our focus during the next 2 years, where we're now funded upon close of this financing. We should be funded well through, hopefully, well through 2018.
Well said, and I couldn't agree more. Just as a disclosure, we became a shareholder about a year ago in GoviEx, and we did participate in the last financing. And I think looking in a downtrodden market for companies that have spent hundreds of millions of dollars on an asset and are valued at a fraction of that is a pretty guaranteed way for success in an upward moving market. Daniel, final question is getting in contact with your team for investors interested in asking more questions. Of course, they can go to GoviEx.com. What's the best way to reach out?
Through our website, info.goviex.com, and they can email myself as well at danielm@goviex.com.
All right. Well, Daniel, Govind, it's been a pleasure. Thank you guys so much for coming on the show and discussing the uranium market and GoviEx moving forward.
Thank you very much, Colin. I appreciate it.
Thank you, Colin. All the best.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip-your-face-off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, troll, did you hear what's going on in Yemen? Or are you too stupid?